Tina.
It's recording.
Oh, okay. All right. Good afternoon, evening, everyone. First of all, I'll let you all know this is not financial advice. This is for educational purposes only. Again, this is not financial advice. This is for educational purposes only. We're going to look at the Euro JPY today. The first thing you want to do is you want to check your indexes before you start to mark up so that you can get an idea of what that currency pair is doing. So, and then what we also do is we write everything down, which you want to get in the habit of doing that so that you have records for yourself. So, you know, this is how we do it, which I'm sure you've heard. So right now the euro is 21% positive. And let's see what the yen is. And you check that by typing in the EXY. You can go up to the box where I just went here, or you can go back to Trading View to do what? Or you can go to Trading View, type in your search, and you'll start on the basic home page. Again, mine is bookmarked already, so I'll just pull it up. And you can double check your indexes here as well. Isn't it coming up? Sorry if my internet is moving a little slow. And you can go here to this search box and same thing, you can type in, if you know the initials, you can type those in. If not, you can type the pair in, well, I believe, and it will come up. And as you see here, it gave me a thing, the indexes there. And then waiting on these numbers. And it also gives you the index here. So is what trend, but we also have to check the JXY, which is the index for the yen. Okay. So let's get that in.
Yeah, but I get off. I get together.
Hey, Queen, can you mute everybody?
That's my husband in the background.
Okay. Hey, Mr. Bay.
I can't mute him.
I hear you.
I just told him to take my phone and go in the other room. And then the yen is 10% negative, so that's considered a true trend because the yen is 10% negative and the euro is 1% positive. So right now the euro is in control, and plus it is also the pair that is on the outside of the currency, because whichever pair is on the outside is usually the stronger of the pair, but sometimes it can also do what it wants to do, because we are talking about the markets here. So, all right. So what we do is we have, we use 4 different time frames. We use the daily chart frame, which gives you your direction. Your 4-hour gives you your momentum. The 1-hour chart is where we look for our stop loss and our take profit. The 15-minute chart is where we get our entry points. We're gonna find 3 different potential entry points, but make sure that you always enter on the 1-hour chart, because it is confusion with that. And we use 4 different colors to do our time frames. So our daily chart, we use the burgundy color. And what we're looking for is we're looking for our immediate high or immediate change in direction. So we're going to mark our high and our low on each time frame. So let me blow this up just a little bit so you can get a better look at it. So, sorry about the baby in the background. He wants to sing everybody today. So we're going to mark this as our high and This would be our low. Let me get this crosshair. Pull those up and make sure. Okay, and then we also do our fib, and you want to drop that in the direction of your candles. So in this case, you would drop your candles on a buy. So when you would drop your fib, you would drop it from the low to the high, from the daily low to the daily high. And a way to remember that, which is an acronym we were taught, is when, if you can't remember, you drop your fib from the low to the high when you're looking for a buy. Is a good way. I'm gonna lock in place. Let me adjust this. And if anybody's fib does not look same as mine, please say something, because it's some adjustments. Excuse me, some adjustments that need to be made. Okay, wait a minute, it's not acting right. Hold on, let me delete it. Start over. But yeah, so if anybody's numbers look different, please say something, because if your fib is not set right and you go to put it on your chart, it could potentially throw you off. You'll either enter the trade too early, too late, or just totally be wrong altogether. So please speak up. No questions, no answers, can be addressed. So please speak up. Okay, so what we're doing is get in the habit of writing your numbers down, because when we do our fib, we're looking for our 38.2, which is the numbers that we look for. So in this case, it's 131.534. Like I said, write those down, and then we go back through and we write on our charts what our potential entries are. And when we do our 38.2s, they're the same color as the time frame you're on, and we mark it in a dotted line. And then you delete your fib. And then on the 4 hour, that is the only time frame that we do not put the Fibonacci on, because it gives you the momentum of it. So there's no need for the Fibonacci on the 4 hour time frame. And keep in mind, because this is Tuesday, we normally mark our charts on Fridays, due to the reasons being, like now, some of our highs and lows will potentially be the same, and that is because we're marking as the charts. So if you do ever get that, it's okay. It will happen. So let me adjust that a little bit. Because like I say, we're looking for your immediate, your immediate highs and your immediate lows. Okay, that looks pretty good. And then anybody that doesn't know how to manipulate the chart, it's something, that you will learn. So don't be alarmed if you're a true beginner and a lot of this looks unfamiliar. So.
Chastity,
Yes, ma'am.
let's say you missed marking up the charts on Friday.
Mm-hmm.
Have to wait till next Friday?
No, you can mark them as they're moving, which is what I'm doing now. It's just sometimes it's the way that Richie teaches us. It's just recommended to do it when the markets are closed, but you can very well do them when the market is moving, which is why I said, like, sometimes you will get highs and lows on the same time frames that will be the same. So if that happens, don't be alarmed. It's just because the market is moving and, you can't stop it. So, that's why you will sometimes get that. So don't be alarmed if you do.
Gotcha.
Okay. And then, let's see, I typically would use, I'm gonna do it for the sake of the way Richie does it. I'm almost done. Let me finish this. Correct me if I'm wrong, Tina or Debo, but I know, like I said, I'm doing this for the sake of training on that high and low, because I would have probably did something different, but in this instance for training. And then same thing, because the candles are in a buy, you're gonna go from the low to the high of the hour time frame. And same thing, we're gonna look for our 38.2 zone on there. And then you wanna write those numbers down as well. And then we're gonna, same thing, we're gonna mark out our 38.2 in the same color using a dotted line. Then we're gonna go to our 15-minute, and we're gonna do the same thing. We're gonna look for our immediate highs and lows. And we're gonna do that in yellow. And you want to, get these as close. And we keep in mind too that we also use the body of the candles. We don't use the wick because the wicks does not give you a good indication of, where the markets are at the moment. So we also use those. And same thing here, we're gonna look for our 38.2 zone on here. And the same thing, we're gonna drop it from the bottom, from the daily, or the 15-minute low to the 15-minute high. And we're gonna look for our 38.2 on there as well. And we're gonna do that in a yellow dotted line. Oh, got that one right, spot on. All right. And then keep in mind, you'll hear different lingo. Depending on who you're talking to, you may hear terms like buy, sell, long, short, bullish, or bearish. When you hear people say that the market is bullish, that means that the market is going up. Another terminology I heard, when you hear bullish, think of when a bull hits you, they take you up. When a hold on, my high move. Let me readjust that. Hold on. But keep in mind that when a bull hits you, a bull takes you up. So that's a good way to remember that the market is going up. If a bear was to attack you, a bear would take you down. So that's a good way to remember that the market is going down. If you're confused on what bullish and bearish means or how it applies to trading. And then you may hear some people say, oh, the market is long today, or the market is short. Long means a buy, which the market is going up. A short means it's a sell. So like I said, it depends on whom you're speaking to And then it's some other lingos that you may hear too, but we're not gonna get in those. But you know, like I said, it just depends on the person who you're speaking with, because everyone says things differently. Yeah, let me adjust that down. Okay. And see, that made a difference. As you can tell, my 38.2 changed because somehow when I put my high, it moved, and things like that will happen. So, you know, don't be alarmed. You just fix it if it does. But things like that are important because I had a totally different entry point, which little things like that can throw your chart off. So be aware if things like that does happen. Sorry about that. I thought my phone was doing something. Okay. And then we're going to go to our hour chart. And this is how we find our stop loss and our take profit. So in this instance, we're going to use, it's a tool over here. And this is why I say you have to know if you're doing a long position, short position, because they're like these tools here. In this case, we're doing a long position because we're buying. So it makes a difference which of these tools you use depending on the direction of your candles. Because if you put it in wrong, you know, you'll basically lose your money because your chart was not set up correctly. So, and then when we do this, we go from the hour 38.2, and we do what's called a 3-to-1 ratio. So you never want to move the green box. You want to move this red box here, and you're going to look for this number, see where it says ratio 1. We want that to say 3-to-1 or as close to 3-to-1, because sometimes it's hard to get it like spot on. Sometimes you will, sometimes you won't, but you want to get it close as you can. Let's see. I think, see, it wants to mess with me. Okay, I'll kind of leave it there, slightly over 3-to-1. But this is how we find our stop loss and take profit. So basically, the target is for 27 pips at this moment, because you don't want to move this green box too much, because what will happen is if you do, you could keep moving it, but you could also either be in the trade too long and miss your profit, or you can short yourself out of profit. It just depends on what the market is doing. So we want to look, like I said, we look for what's called a 3-to-1 ratio, or as close as 3-to-1 as you can get it. So, and that's our basic setup. And then what I'm going to go and do is I'm also going to those numbers and everything that I wrote out, including the indexes, you want to type those on your chart somewhere. And I believe, wasn't the direction of the day chart, it was bullish, correct, Debo? I think it was.
What'd you say, Queen? My bad.
No, I was getting ready to mark the chart because I wanted to see what the direction of the day chart. I think it was bullish as well.
EJ?
Yeah, I'm looking at it now because I was getting ready to write all this stuff on my chart to show them how to. Yeah. So the direction is it's a bullish direction also. Yeah. So, like I said, and that's why those numbers I told you guys to write down. That's why those numbers are important, because now you have to have some kind of mental note. Because even if you know, hey, it's over here, you want to have some type of mental note somewhere. So what we do is we go to the text box and we're gonna write direction, bullish. Then we're gonna do D1 parentheses, and then we're gonna write those 38.2 numbers down on here. So what's that? 131.534. Then we're gonna do our H1 entry point. That's 133.059. M15. 133.018. And then you also want to write your indexes on there as well, because they change from day to day, hour to hour, minute to minute. And the yen was, well, the yen was, what was it, negative or positive? I wrote it down, but I don't remember. Let me see real quick.
I just looked at it. Hold on. The yen.
Right, I don't remember. I wrote it down.
10%.
10% positive.
Negative.
Okay, right, because I forgot to put the negative. I'm like, wait a minute.
Mhm.
All my stuff out. And if anybody have any questions, please ask, because if you don't ask questions, we can't help you. And the yen was positive, right, Tina? 21% positive.
No, it's not that high. It was like, it's right now, the yen is at
It's changed.
10% negative and the dollar is 8% positive.
No, we're on UJ.
Oh, I'm sorry. Yeah, I'm looking at USD. Hold on.
Hold on, give me the euro again. Make sure I got, because I wrote it down, but I'm like double checking. I know they changed. Give me the index for the euro again.
Hold on. So the euro is 21%. So 0.3 with 21%.
Positive.
Yes.
Okay, so 21. I did. Okay, I wrote it down right. So 21% positive on the euro, and the yen is negative 10%, right? Negative 10%. Okay. All right. So that's how we do, and we make a note. So to be on your chart. So the reason we do the 3 potential entry points is because, say you miss, that should have been minute 15 there. Sorry about that. Because if you miss one of your entry points, we are taught not to chase the trade. So if you miss one entry point, you simply have to have patience, wait, and then you will catch it on the next potential entry, as long as all your retest and your confirmations and everything was in place. Because the moment you start chasing trades and trading without proper risk management, you are basically setting yourself up to lose money. So that is why we do these chart setups, so that you can see what the market is potentially doing, because we're training you to react to the markets, not to predict the markets. We simply just want to react to what the market is doing. Any questions? We'll open the floor up for any questions, comments, concerns. Please speak, ask, because if you don't, we cannot help you.
Is there anyone having troubles distinguishing their highs and lows? Like when they look at a chart, they're unsure of where they're supposed to go? Because if so, this would be a good time to say something.
I am. Sometimes when I look at the charts, I'm a little confused.
Okay, so Chastity has a good way of finding it. I don't particularly use it because I kind of see it, but Chastity has a really good way that she is able to find the highs and lows or distinguish the immediate change in direction, and that's using the line graph. The only thing, like I told Miss Yanni earlier today, because she was saying the same thing, is that when you use the line graph, it does not distinguish the wick from the body. So find your highs and lows on the line graph, but then when you go back to your Hikanashi candles, you do want to adjust the line to the body of the candle. So if you see that your line is on the wick, just move it up or down, wherever it is, move it up or down to fit the body of the candle. And
Here, I'll show you. I'll go to another blank chart real quick just to show you. I'll just go to another random chart just to show you how to, if you were looking for your high and your low. One second. It's just another way to kind of help you see the change in direction, or if like say like with Siobhan, how sometimes she has issues, and one way may work for you where it doesn't work for the next person, but it's another way. Richie showed me this, and because I had trouble at first a little bit too, and it gave me a good indication. So hold on, the chart. So see here where your candles next to where you have your currency pair, you have your time frame, and then you have the box here where you can go to your candles or your line graph. Yep. So simply go to the line graph, and it will give you this of the lines. And if you're having trouble identifying your high and low, like I'll show you, and then like she said, don't forget to go back to the candles because you have to adjust it to the body of the candle. The line graphs does not give you the volume of the candle. It just gives you basically what the whole chart as a whole is doing. But if you needed to do some, let me blow this up a little bit. Simply move it there. And then if we were going with what's just immediate in our face, because like I said, this is just showing you guys another way to do so. You would mark here. I may have to move it some, but this is just a way to show you. And then you go back to your Hikanashi candles. And what you're going to do is you're going to adjust it to the body of the candle. See that? And anybody have any questions on that? Siobhan, did that help you?
Not really.
Okay.
So what
we're trying to
part of the support and resistance don't you understand?
Okay. Bye.
I'm really just not. I'm not seeing the immediate high, immediate low, because when I was on the phone with, a webinar with Candace, she was like, well, I don't understand what you don't see. And I don't know, maybe I'm just not doing it often enough.
So you got to look for the noticeable change in direction. So originally when I started doing it, what I did was, Chastity, if you could point out the V, that big V right there.
Okay. See
how
this?
It goes down?
Hold on. Look at this, Siobhan. I'm going to draw the arrow. See this here? Because you're looking for patterns of VMW. They may not be perfect V's. They may not be perfect W's, but it's going to give you an indication of that. So see how I'm drawing the V? Do you see that? Okay, so what it's doing now, in this instance, is either starting the M or a W. We don't know yet because the market isn't doing a lot of movement, but in some instance, you're gonna get part of the V, the M, or the W. And remember, like to make a V and to make a W, a W and an M is basically just upside down of each other. So the market could either do that, it could go up it could go up and make a M, and it may not be a perfect M, right? But it'll also give you like a W. So it could do, see how you still have the V in there? So it could either have done that, it made an M, and then it also could have gave you a W. So it's like they don't separate themselves. So don't look for a separate V, a separate M, and a separate W. Because even if you look back here, see it did a W, see it did a V, then it came down to a W. Then it went back up. So potentially this will probably do an M because it works in a way of a pattern. But it's not guaranteed. Sometimes the V's are really, really big. Sometimes they're really, really small. It just depends on how the market is moving.
Okay, so wait a minute, Chastity. So the easiest way, Siobhan, to get you to see it is, you see all the red candles that's going down?
Yeah.
It's like a whole bunch of them.
Uh-huh.
When you get to the bottom of and you see the green starting and then they're moving up, that's your change in direction.
Mm-hmm.
That's going to be your change in direction, because they were headed down, like they were going straight downtown. They weren't going nowhere else. Then all of a sudden,
right,
they hit a brick wall and they started going up. So that's how you're going to see your immediate change in direction.
right here.
Now,
This was
the few candles that's in the front that's starting, that can continue down, or it could hit the line and bounce back up. But if you're looking to see your immediate change in direction, you want to look where the candles were headed, like nobody's business, in one direction, and then all of a sudden they turned around and went the other way. Does that help any?
Yes.
Okay.
Thank you.
You're so welcome.
All right. Anybody else have questions?
Hey, Chastity, this is Yanni.
This who?
This is Yanni.
Hey, how you doing?
I'm doing good. I hate to do this, but can you show it to us just one more time with the difference between the line and then the candlestick?
Oh, yeah, let me go back to that one because I don't want to move any time the charts I have, because then I don't. But when you're looking for it, I'm gonna let it load. Like I said, my internet, bear with me, my real internet will be on next Tuesday. Okay, so you want to go here to the box where the candles are, and you switch to the line graph. Let me delete all that stuff off for you real quick.
Just right click and then remove all.
Or I could just go here to the little garbage can.
Oh, yeah. I never remember that garbage can.
Okay. Come on. Okay. I'm sorry, but that's the number. Hey, come on, little man. You're trying to get this stuff down. Okay. So, what are you marking up, Tina?
That is not me.
Who's drawing on my screen?
Who do you think?
Devo.
That ain't me, baby.
That's not.
Is that Rob?
Yeah, that's me.
Don't be over here drawing. No, she's just trying to learn how
Disclaimer.
Okay, you see the line graph, Yanni? Okay, see how it gives you just some, looks like, some B's, M's, and W's pretty much. So if you're looking for your, how to adjust the candles, if you're going with the high here, you would mark it here. Sorry about that. My computer sometimes likes to. No, you can refill it for me now. Okay, Richie wants me to go down here. Well, I'll go down there, Richie. We were just showing them how to adjust the body.
Yeah, that's
Just
good.
showing them how to adjust it. So then
I'm not here. I ain't here. I'm just watching. I'm spectating, spying on you. That's it.
Okay. And then, Yanni, you go back to your Hikanashi candles. So what you want to do is, like I said, my hand is moving. So then you want to take and you want to adjust this line to the body of the candle. I would have went with that low too, Rob, but for the sake of training, I was showing the immediate, like you taught us, but I would have went there if this was a chart I was actually marking. But did that help you, Yanni, to see?
Yes, yes, thank you.
Yeah, so if it's just another way to get, like, that may work for you where it doesn't work for the next person, because as you see, it kind of gave you the width and not the body of the candle. So make sure if you are using the line graphs, again, so no one is confused, you have to switch back and forth from line to the Hikanashi candles, and you want to use the body of the candle.
All right. Does everybody know? Sorry. Does everybody know how to find their indexes and how to read their indexes? Okay, so everybody knows how to do that. All righty. Does everybody know what it means when you're looking at the Australian dollar and the Japanese yen as a pair? Like, which one is the dominant pair, which one's the weaker pair, and what that means?
The dominant pair is the first one, correct?
Correct. The dominant pair is going to be the pair that's in front.
Okay, and I was arguing with the kids, but what about the indexes? Can you go over that, please?
Sure. So Chastity's going to go to the indexes. So when you get to your indexes, you're looking to see, of course, positive or negative. Positive is going to be if the numbers are green, negative is red. What you're looking for is to see if your dominant pair is strong or weak, and vice versa. If the latter pair is strong or weak, you need to do that first before you start setting up your charts. That's just a part of the curriculum, how it's taught. We need to look at those first, because if they're sitting even, you're probably going to see consolidation, and you never want to trade when the market is in consolidation. You always want to trade when the markets are moving. So again, this time of the night is not a good time to trade unless you've been holding a trade or you're in a long-term trade. But if you are in a day trade and you don't plan to be in it for more than a few hours, then you don't want to hold it over the Asian session. The Asian session is the retracement session. And then your London session is your true trend session. And then your New York session is the new trend session. So New York, true is London, and don't even worry about Asian. Just don't even worry about it. And I do see a lot of people are migrating over to the exotic pairs. That's cool and all if you want to do exotic pairs. Be aware that the exotic pairs do come with bigger spreads. So, as I was telling Miss Yanni earlier today, I know this is a little off topic from the indexes, but you guys, both of those lines have to cross your entry point for you to go into profit. You can't have the ask line profit go over your entry point and expect to be in profit. So what that means is if someone says that there's a wide spread on odd JPY, and then you look at it and the spread is like 30 pips, that means your ask line is going to cross first. Your bid line has to move those 30 pips above your entry point prior to you going into profit. So
okay, but Chastity, I think she pointed out 2 places that you can check the indexes.
yes.
Mm-hmm.
What are they?
right here where I typed in AXY
Uh-huh.
on the chart, or you can go to Trading View, open up a whole new window. Like I said, mine is bookmarked, but you would type in Trading View here, and it will come up. You will get this screen, and then the search bar here, you would type in an AXY. And it's going to come up here as soon as it loads. See, it gives you the index here. And then if you also look over here to the right of the screen, it also gives it to you there. You could also Google it as well. You can go to Google and you can Google the whichever currency pair you're on to find out the index too. So it's like 3 different ways to check to confirm if you're confused. So you can go, like I say, open a new tab, type in Trading View, or you can go to Google, into your Google search, and you can type in the Australian. I think I spelled that right. Richie showed me another way. It didn't come up, but I think, is this it here? I want to say this might. Is this it? Richie, is he still on here? I think this was the other way because he showed me on Google as well how to find it. But the simplest way is
type in Australian dollar index, and then it should.
Is that what I was supposed to type in? I thought like something like that. I know he showed me a way on Google too, but Trading Views, comes up. You like those are the 2 different ways. No, that's not what we want. Okay, I know that wasn't what I wanted.
Yep, that's it. Investing.com.
Okay, that was the one. Right, and these are just different ways to check your indexes if you're confused on your trading chart. But and I'm sure it's in the beginners folder as well, he has a chart in there that teaches you the abbreviations for each index. And as you see, it brought up your index here. Does that help you, Siobhan?
Sorry, yes.
Okay, so it's just a couple different ways basically to double check yourself. Like I said, you can go here on your chart as a whole, up in the pair where you're looking for your different currency pairs. Like if I was checking for the dollar index, same thing, the DXY, and you see right there that the dollar is 8% positive. It's not in a true trend yet because it's not above 10% or below 10%.
Okay. Now, Tina was saying, basically, the safest times to trade are like from 2 in the morning until I think, what is it? 9, and then the New York, which is 9 to 5.
Yes,
Yeah.
but I will tell you that after lunchtime, East Coast around 12. After 12 o'clock, the New York session does start to slow down.
Okay.
So it doesn't move as fast as it does when it initially opens in those first hours. You will see trading starting to slow down, or your pairs may start moving slower. So at that point, you got to start making decisions as to, are you married to this trade? Are we holding it for more than a few hours? Are we holding it overnight? Are we holding it for the week? Have you decided that this is going to be one of your position trades and you're going to hold it for the month? If you have, then you would need to look at a different way to set up your charts, and you should be asking those questions during your one-on-ones. But it's all dependent on what you're looking to do. So that's why it's very important for everyone to go through their beginner's file, for you guys to go through your IML basics, because the IML basics does go over the timelines for these sessions. So that's really good info there. But yeah, Asian session, and after 1 o'clock East Coast, you're going to see the markets begin to slow down. And then, of course, on Friday, they close at 5.
Yep.
So, you just have to do what's best for you. And that's about it. No one can tell you how to trade or what to do when you trade, because at the end of the day, you're the one wanting to make money, and you know what kind of trader you are, or you're going to learn what kind of trader you are.
Okay.
So does anyone have any questions on anything that Chastity has gone over so far? Anything that I may have mentioned? I just threw in there about those pips because I didn't realize that some people didn't realize that they can have one line go over their entry point and still be negative as far as their profits are concerned. And the reason why is because of the spread. And I have been seeing people going into exotic pairs, and exotic pairs have larger spreads. So it's going to take you longer to get to profit.
Right. The spread is what you have to make up before you see profit.
Mm-hmm.
So if it's a 50-50 spread, the spread is 50, you have to make that up before you see profit. So the larger it takes to see.
And it looks like when I go down, I see some names that I don't personally recognize. But does anybody have questions that, this is their first Tuesday training? Anybody?
No, so far I'm getting it.
You're getting it so far? Okay.
Yep.
So are you familiar with the VMW pattern?
Yes.
Awesome. Anyone else needs to go over the VMW pattern, or you got it?
Hey, Tina,
Yes, sir.
can you like illustrate like what a V or W or M would look like? Can you like draw a trace line on the candlestick so they can like see that it don't got to be perfect, but long as it resembles that letter,
Mm-hmm.
kind of like going to show you the structure.
Sure, Chastity. Go ahead.
Okay, well, just using where we're at now. 80 foot, right?
She funny as hell.
Because
boy.
when you see, like Ricky said, they're not going to be perfect B's. They're not going to be perfect M's. But if you start to look, you'll notice. Like you see, you got the V. Oh, sorry about that. My screen likes to move around. And then let's start it going into a W.
Mm-hmm. That's perfect.
Everybody see that?
So you can see that
And
double
then
bottom.
this kind of did a sort of an M, but it's like we said, they're not perfect shapes, but you're gonna see them. So
Just so they can get a feel of what the letters, how they
right.
look.
So that was kind of a really short one, but it's still kind of playing out a little bit. Does everybody see that? So they don't break up. That's what we were seeing. It's like a V goes right into an M, a M goes right into a W, back into a V. So you're not looking for a perfect V, a perfect M, and a perfect W.
Yes, ma'am.
Anybody see that? Everybody see that?
And
Yep.
Siobhan, if you
And
were,
that's all you.
I'm sorry, Chastity.
Go ahead, Tina.
Oh no, I was
Go ahead.
going to tell Siobhan that if she were to like start at her very last candle and work her way back, she might be able to draw her own lines and point out to herself where the bottoms are and where the tops are. That might actually help you in defining out where your highs and lows are. That might be an option to help you.
Yeah, because
work your way backwards.
Didn't you say, Richie, too, like the V and W's, your double bottoms are your W, your double tops are your M. So I don't know if you know those candle patterns as well, but let's see, I'll show you kind of here.
Yeah, you're right, Chastity. So you got the W, and it can look any way, you know. So W, V, then M. So with a W, this is a bullish breakout. Y'all heard how Chastity explained the bulls to you, just means the uptrend when the neckline is broke out. The V is the fluctuation of price. You'll learn how to trade that in the next group. And then you got the M, which is a bearish breakout when the neckline breaks and it goes down. So it's a downtrend. Each leg should go as far as the length to the leg to the left of it. But it's rules to that as well, which we'll cover, you know, as you guys progress into the next stages of the groups. But WVM is called market structure. All of this gonna come together as you kind of progress into each group. Everything will come together for you. But the number one thing that I want to say is that you got to be sure to like study and practice, you know, and like when they come down to this, I'm a real judge of character on who's studying and who not, you know. And then, I mean, at the end of the day, it ain't a big deal because it's like it's up to you. You know, you got to put in the work because we can only do so much. But you got to be sure to be setting up charts, going through the folder, going through the training folder, so that way you know, because a lot of this information the ladies give y'all on Tuesdays, you have this information. This is just so you're able to have those open topic questions, you know. So if you got questions, like really don't wait, you know, and then get in the group and, I want to do a 101 or I need a this, that. Like this is the time for it. You know, like what they do already, they don't have to do it, period. You know, so make sure y'all take advantage of the questions, you know, don't just sit and watch, you know, ask those questions that you want or that you need answers to. And the only way you really gonna get this is by setting up charts. You should be at least setting up 2 to 3 charts a day. Even if you're not taking those trades, start setting up those charts so that way you can be familiar with what it is that you're doing and build that muscle memory so you know what's happening and how the markets move and how to set up your charts in general. Because this is the foundation of each group that after this. So if you don't get this like basic skills right here, the rest of the groups is going to be harder. It's going to be even harder for you to really get it. You know, so this is really important that y'all ask those questions and that you actually study and do the work. You know, really do the work. Like I said, because it's not going to get easier if you don't know how to set up your charts basically. You know, just like this. And, you know, even for, you know, because we do have people that they end up creeping through the cracks and getting into the next phases, but it's not going to be beneficial to you. So,
and it will show.
Yeah. So you got to really pay attention to the detail because that's what it's all about. It's all detail oriented. So if you don't get something, like I always say, no questions, no answers. Simple as that. You know, I'm not going to hunt you down about nothing. If you don't want it better than I do, then that's just what it is, you know. But like I say, so y'all take advantage of what the ladies doing for y'all, especially as y'all get into these next groups and y'all learning from me, you know, specifically. Like they'll tell you, I move fast. You know what I'm saying?
Don't go this slow.
No, I move quick. I'm gonna ask you one time. You got a question? No question. All right, this is what we finna do next. This is what you do. So, yeah, take advantage of that shit. Take advantage of that shit.
And you guys, when we're marking up charts, I made it a habit from day one. When Robert marked his chart, I was marking right along with him. Just because, like, I was actually done before he was yesterday, but we ain't gonna talk about it.
That's because we getting good.
But was because I want to make sure that whatever he's seeing, I'm trying to see it too.
Yep.
So that marking your charts is gonna be more beneficial to do it when either Chastity, myself, Robert, Debo, Jason, whoever you're with on a one-on-one or in group. That's gonna be more beneficial to you than anything else.
Right, let me show them this and tell them, because this is how your charts are gonna start looking more and more like this. And if you don't understand the basic stuff, like we're saying,